Hello folks, I'm L.A. Little and this is your daily TA wrap, where we take a look at these markets and we do it from a different perspective than most technical analysts. We look at it from a neoclassical perspective. And what does that mean? Well, we look for supply and demand. We look for test of those areas and we look for qualified trend. That gives us the information to make decisions, and that's what we do here each and every day, each and every way. What happened today? What does it mean for tomorrow? I do a show 4 times a week, every Monday through Thursday, live at 9 o'clock Eastern Time, here from the base of what is a continuing snowy Rocky Mountain. Folks, I'm glad you could join me. Let's take a look at what happened today. We were talking last night. Looked like it was probably going to try to bounce, and bounce it did. And that's kind of the story. Let's pop in here, take a look at the numbers, and make sense of what took place here. So let me pop over here, zero in a little bit, and see what we got. All right. So I got the sector up first. Healthcare, most important sector today, and technology was second. Dead cat bounce in the utilities. The XLE looked like it wanted to push higher, did. But that's just a range trade right at this point. What was interesting today is the XLF couldn't get going, and that's been where the strength has been lately. They pushed up higher, dark candle again. We can look at that chart later, but that was it. But you can see pretty broad strength here, and that makes sense after the market been down first 3 days of the year and had been as strong as it was. You can see here healthcare, UNH, J&J. I'm on the Dow Jones stocks now. ExxonMobil, IBM, all these big guys. These are heavily weighted. If we look on the losing side, the financials, the ones that have been leading. So DD financials, that's pretty much it on the downside. Now let's go to the actual closing numbers. We had the Dow up 105, almost 106, 16,531. The S&P's tacked on 11, 1838. Composite up almost 40, 39.5, 41, 53 was the closed index, 31 higher, 35.57, almost 35.58, and the Russell was the leader today, 10.5 higher, 11.57.5. We had gold. Actually, gold held in pretty good today. They were trying to beat it down. I think it was down 6 or 7 at the end of the day. Silver was down worse. Oil was up a bit. The dollar was up about 0.25%, and that was pretty much the story. If we go over and take a look at the markets, though, let's see what happened, because last night I was considering the thought that what we do, let's back up and review what we were talking about. We got a retest regen zone that just hasn't taken place on the S&P 500, right? Just hasn't happened. We got a little bit more volume today, but still, we're just kind of climbing out of the doldrums is what we're doing. and we're coming back up. We did not retest and regenerate yet. We didn't do that sequence yet on the S&P 500. We've done it elsewhere, but not here. The fact that it still needs to be done here, or that there's a good chance that it will be done here, right, and that we'll see this market trade back into this range, suggests that maybe we could get a bounce. And why would we get a bounce? Well, the bounce was a result of the NDX coming into its retest and regenerate zone and allowing a bounce to take place, and that's exactly what we had. We had a nice big push. If you remember those numbers as we started the show, those numbers were showing us a nice big push. Not a nice big push. Those numbers were showing us that we had more. That's what I'm trying to say. I'm trying to think here what I was thinking of. My mind blanked out. We were looking at a larger push on technology and in the Russell. Why would that be? Well, both of those have done their retest regenerates. Both of them have done it. Both of them are doing the the comeback here, and both of them are wanting to press higher. So when we look at it, that's what took place today, right? You got the bounce out of the retest regenerate zone. That gives us the ability, or it gave the market, I should say, the ability to actually push higher today, and that in fact is what it did. Look, I lost my presentation assistant here. Hang on, let me grab it back. All right, here we go. So that's what we saw today. So we got a little bounce coming back up, right? And that bounce, now the question is can it get back up to new highs, or is it simply going to set up a deeper retrace? My thought last night is that we'd probably get a bounce and we'd get a deeper retrace because of the S&P 500 still wanting to retest and attempt to regenerate. And it's not just the S&P 500, it's also the NASDAQ. Right? The NASDAQ, if you look at it, also did not get back far enough to actually come back and test that high. Now remember, we had kind of this, I don't know that it was an oddity, but we had the quadruple witching bar, which is a heavy volume bar, sitting up there, and we did come into that, and that was where it made sense last night as we talked about it. It made sense that we'd try to bounce out of there off that quad witching bar. And if I go back to the S&P, it also made sense there because it got into the top of that bar too, I believe, if I remember right. 1823.75, 1823.73. 2 pennies into the quad witching bar. That was where the bounce made sense to come from, and that's exactly what we got out of it, right? Big bounce right back out of that area. Okay, so now, what do you watch for to tell you whether this bounce is just a bounce that's going to fail? In other words, we've got an ABCD structure potentially that could take us quite a bit higher. We also now have a potential ABCD structure to the downside, and that's always the way that these things line up, right? You can have one up and down when you get a retrace, because the retrace potentially can set up the next deeper retrace. And in this case, if the S&P were to turn right here, that deeper retrace would take you right into where I believe is the key place that one would want to buy, and that is the first retest regen off the S&P 500 swing point highs that were broken. So that setup is the setup you'd like to see, even if you're bullish, right? It would be a more powerful, I don't know that it would be a more powerful move back to the upside, where it would certainly be a better place to be buying, right, than trying to chase it up here when your risk is still fairly high. So if you're a bull, that's what you want to see. Will we get it? Well, what you want to watch is the top of this bar. January 2nd bar, that's the key bar. S&P's the key index. 1845.86. If we get over that, all bets are off as far as that retrace, because that simply says, hey, you know, it came down, it tested into this big bar, wasn't enough to break it down, flipped around. You got the retest regens on a couple of them. That's all you're going to get. And so right now, you know, that's what you're watching on the way back up to try to measure. That's your measuring stick on the way back up. If I look at the sectors, sectors are strong. I don't see anything in any of these sectors, and we haven't really looked at them much lately because we're just coming out of that doldrum. But you know, there's nothing bad here, and I'm looking down. The only one that looked ugly today was the XLF. I'm popping it up for you. That looked pretty bad. But you know, you got the XLV up here trying to make new highs again, trying to break out. It's up there testing head volume today. If you look over at consumer discretionary, that one's still hanging pretty good. They're all up there, right? The only one that was showing any kind of a strength index showing weakness was the XLE, because remember, it failed at the top and failed to hold the bottom of the retest regen zone. Okay, so that was the bottom of it right here. Failed to hold it, got up underneath it for a couple of bars. Now you're back over it. Right now, this is a range trade. And like the rest of them, the December 2nd bar is the key bar. This bar, right? The December 2nd bar, the top. If you get over the top of that and you start getting over it in multiple sectors, the indexes are going to go. They're going to go to new highs. And so if we want to watch sectors that have pulled back, and I will pull up like the XLK, for example. XLK, December 2nd bar is here. Top of it is 35.62. We're not that far away. That's the bar you want to watch. That's the bar with some volume, and that is the bar off the top. If you get over that bar, multiple sectors, more than likely the whole index, the indexes are going to crawl up right behind it. So if you're trying to measure this, that's what you're watching. All right, let's pop over and look at the OX markets, and we'll start with let's start with the dollar, actually, because the dollar was trying to push back up last night, and it got a little push today, but it really didn't get much. It's still going in this big wide price spread high volume bar from November 7th. Okay, so all right, well, actually this is an interesting pattern, so let's talk about it for a second. So the big bar is here, right? That's where the resistance zone was. It's off this bar. You had a swing point high, you broke over it right here. That's on this particular bar. And then you immediately retest and now regen off of it. So tomorrow becomes a big day, or actually the rest of this week becomes a big day, because if this thing can actually retest and quote-unquote regenerate higher, in other words, you come over it, you fall back under it, you hold that bar, and you push back up, right? Because the volume on the swing point high, once you got over it, was pretty heavy, and you don't have it when you're testing, so that suggests it's going to try to flip back around and go back out. If that's true, and the reason I bring this up is it should matter to some of the commodities, is that would set up a reasonably decent sized ABCD structure that does what? Takes it right back up to this swing point high, which on the weekly, and we can pull that out and take a look at it, on the weekly takes you back to the weekly highs. And what does that do? Well, that weekly high, if we look at it in this area, right, that is this bar you're looking at here. If you get over that, now what do? You set up an ABCD structure on the weekly, plus you actually have a breakout on multiple swing points if it can actually get over these areas. That could propel it higher. In normal cases, that would be, I don't know about normal being the right word, but you would think that would be bad for commodities in general, and that would actually Now, it's probably right now, it's probably the only thing it should be bad for. But what's most interesting, and the reason I started with the dollar, is that if I pop over and bring up the gold doesn't give a flip about what the dollar's doing. The gold's going right with it. When you see something like that, and you see, gold pushing with the dollar, then you have to say, well, wait a minute, one of these is stronger than we think, or one of these right now, I mean, they're just divergent, right? Gold held today. I mean, yesterday you had kind of a little mini crash down into this area, tested and held, and then we got the bounce back up today. We talked about that last night. If gold put in the low here, that high, I mean, that ABCD structure, if it gets over this area, it takes it right back to the next high. Folks, gold hasn't gone over a prior high in a very long time. Well, let me take that back. Gold hasn't broken through a retest regenerate zone in a very long time. And what I'm talking about is right here. That was a retest regen. You broke under it down in here, right? You came back up to try to retest here, and you came back up to retest there. Both of them ended up breaking farther down. If you pulled this back farther, matter of fact, there's another one right up here. We can actually look at that one. That one's in view. And even if you go back farther, you'll see the same thing. This one couldn't retest, this one couldn't break the retest. It retested, regenerated lower. And we can see that multiple times on the daily, and that's also been true on the weekly, right? You can see it over here on the weekly, right? What does it do? It fails. You get another one here. Now this one actually did get over it and then failed. It got over for one bar and couldn't hold. So that one was slight exception, which also kind of tells you that, hey, it's trying to find a bottom. Well, this is a key area. Can it get over this high and break right now, break this retest regen? Again, got over at one bar, came back underneath it. Looks to me like it's going to try to get back over it now. And if it does, that suggests that gold is trying to put in a bottom, or actually is putting in a bottom, and the gold stock should follow it. So, it's an area to look at in the market. This is why I went to the dollar first. I don't know which one's going to be the head fake, gold or the dollar, or will they simply run together for a while instead of being, opposite ends of the spectrum. Bonds, a little push up today, nothing special there. I don't see anything happening there. If we look at the calendar, today Fed meeting started. Tomorrow they're going to do an announcement. They're not going to do anything. I mean, what are they going to do? Yellen, he's a lame duck Fed chairman now. Yellen's in there next. He's not going to do anything in front of that. They're not going to do anything. So it's a no-op. It's not going to matter. But then you got the ECB BOE the next day. I don't think the market's expecting them to do something. If they do something, it will push the dollar higher. It will decimate the euro, and it probably will push the equities higher to start with. But it is going to give problems to the euro, and it's going to give problems probably. The markets over there would actually probably bounce off of that, but I don't think that's what's going to happen. But that's a good segue, so let's pop over and look at Europe real quick, and I'll show you what I'm looking at there. So I'm going to go to the DAX, which is the strongest of the three. The DAX, again, December 2nd bar, comes off hard, it's pushing back up, volume's okay, it's about halfway up into the bar. You get about halfway up, you got a good chance of making it to the top. The other side of that is that it came down into that do a retest regen just like we were doing, and it actually got there and held. So far the DAX looks stupendous, right? Looks fine. Going to go back up, try to test a high. That's the way the DAX looks. Then if I go to the next strongest one, which actually happens to be the FTSE right now, the FTSE is pressing back up against these highs. It's in this huge resistance zone that it keeps fighting against. It's got this big wide price spread, high volume bar over here. If we draw that in so you can see it, it's right about there. That's what it's dealing with. That's what it's having trouble with. It's actually pushing pretty good volume back up in there. This is a huge ABCD structure if it goes up, right? I mean, that's like off the charts. That would blow out all of these. Now, if we go back over and look at it on the weekly, you know, you got a swing point high there, and then another one just up above it, just slightly above it. This push, if it actually took place, those numbers are it's about about 300, so I'd take it to 7,000. Let me see what this number is. 68. So I'd take it over the highs if it did it, if this actually held and broke out. So the FTSE also doing well. The one that's lagging and the one that's going to probably continue to lag is France. France, you know, when you come to a chart and you see a bar like this, and I've said it many times before, they'll try to come all the way back to the top of the bar. Well, sure enough, they did. They went right back to it. And then what do? You get another one just like it, right? And these are actually gap downs. I mean, they show up on the chart as not a gap down, just like our Dow would, for example. You don't see gaps. But those are gap downs. You just get hung out to dry. So now it's trying to climb back up there. It's going to have serious resistance here this time. That zone is going to be very hard to get over. So the CAX is the weak link. And so if one wants to watch what's happening in Europe, watch the CAX. Because if the CAX can't get back over this zone, then Europe is not going to move that much higher because it's going to keep pulling away because it's such a big market. So it's going to keep the German index and it's going to keep the English index, the England, in check, and it's not going to let them push higher. And if in fact that is what's going to happen, and I suspect it is, then this whole range trade is going to continue to build out. And if it continues to build out, my guess is what you're going to see is it is going to come all the way back down here and test the bottom again before it's over with. If true, Europe is not going to lead us higher. So now, take that, flip it over to the Hong Kong market. China. China looks to me, from everything I'm seeing with respect to, you know, it's the end of the year over there, it looks to me like they're going to try to rein in their money one more time. Every time they've done it before, they loosen up again because they're afraid of the consequences. This time it looks like they're going to try to hang on to it and actually rein it in because they get some serious problems with their property. You got two big ranges. It's playing on the bottom end of the bottom range right now, and it cannot lift. Right? This is a big structure to the downside. ABCD structure. If I pull in here and look at it this way, you've got an ABCD structure that will take it significantly lower. It's a swing point break here, swing point break there, swing point break here. It's already broken this one. This thing looks to accelerate to the downside if it gets going. Now, back to our markets. And I took you all the way that route to give you a feel for the fact that we're not isolated here. You know, someone asked yesterday about, or the implication on a question yesterday was that these markets were simply going to go back up and make new highs. Well, maybe, but maybe not. When I look overseas, it looks to me like either we're going to do it on our own or we're not going to do it. So this ABCD structure potential that's in place here, yeah, it can trigger and we can go higher. It's possible. But if I look over to Europe, what it looks like to me is like this little pullback, you know, maybe it gets back up to the top here and fells, or maybe it fells right where it is, and you get a little push back and you come back into here and you try from there. That to me looks like the most common, the most likely scenario I don't think we're going to break out yet. So that's my take. Let's go look at your questions. Not very many. Feedy, my man, wants to look at BP. Let's take a look at BP. So BP is British Petroleum, one of the mega, integrated oil guys. This company, of course, was the Gulf crisis, the oil spill, decimated them way back when. But they had a nice big spike up, gap up. They got some nice earnings going on. You saw it come back and test. Now you're back up here and you're trying to gap higher again. Volume's picking up. Yeah, it doesn't look bad. Maybe this is one of the reasons the English stock exchange looks as strong as it does, right? ABCD structure here, trying to take it higher. The big integrated oils, it's a big weighting in their index. And it consolidated pretty hard here the last week and a half over that high. I can't see anything wrong with it. The hard part here is you don't really have a breakout. You don't have anything to thrust this thing, I guess, is the way I'm trying to say it. What's going to thrust it higher? It's just, baby clawing up here. The other bad part about this particular one is you almost have to trade it on an intermediate term time frame, on this time frame, because you'll get gaps all over the place because it trades 4 or 5 hours before we ever open. So, it can gap all around on you, and if it does, if markets do weaken, it's going to gap down on you, and there's nothing you can do about it. So you got to realize that going in. But yeah, it's a nice looking chart. Nothing wrong with it. Federico, okay, Fidi. I like Federico is my Italian friend, and Federico is an active, engaging young man from what I can see, and I appreciate you being out there and asking questions like you do. All right, we got another one. We may have missed it, but how do you see CRZO if it comes back to support? Let's take a look at CRZO and see what we see there. So CRZO is another oil-related concern. These guys, I think they're actually drillers, if I remember right. And this was a stock that I and subscribers wrote up for a very long time. I mean, we bought this. I'd have to go back in the books and see where we bought it, but we rode this thing way up, and eventually took profits on it. To me, when you get a big, one of the things here, let me say it a different way. If I bring this up here, this book, Trend Trade Setups. In this book, I talk about, there's some stuff here about it, but I talk about the fact that, there's sideways trends, uptrends, and downtrends. And the way the way sideways trends typically set up is that you get these kind of pushes, right, where you get a nice long steady trend, and then all of a sudden the thing kind of goes parabolic and the volume escalates. This was the escalation day. You can see it went right up to the top. When you see that, right, that sets up a range. That typically sets up a range, and that range usually holds for some period of time. Now, if I bring over, in this case, if I bring over the monthly chart, you've got the same thing here, and you can see it even more clearly. I suspect that's going to take multiple weeks or months even before it really can take off again. So to me, it's a range trade. What does that mean? You buy the bottom of the range and you sell out some near the top. And if you're interested in trying to build a position, you know, let's just say you buy 100 shares at the bottom and you sell 80 at the top. And the next time you buy 100 more and you sell 80 again. And you eventually build yourself a pretty good position, assuming that the trend's going to break out higher before it's over with. So that's how you trade these things. That's all this thing looks like to me, is a big range trade. So I'm not particularly interested in trying to trade it any other way than what I just described. And it's a fine trade if you do that, but that's the trade. Folks, I'm going to have to leave it there. My time's up. I appreciate you dropping in. Tell a friend or tell two. I'm L.A. Little. This is and was your Daily TA Wrap. Tomorrow will be Fed Day. I doubt we do anything. It's probably going to be a quiet day because nobody's going to do anything in front of the Fed. And I doubt you're going to get much excitement after the Fed. The excitement's Thursday and Friday morning. We'll see what they do then. Have yourself a great night, and I'll see you next time. Good night, folks.